بسم الله الرحمن الرحيم. السلام عليكم ورحمة الله وبركاته. Good afternoon. عليكم السلام ورحمة الله. Good afternoon, distinguished guests, excellencies, ladies and gentlemen. On behalf of the MENA Center for Investment, it is my pleasure to welcome you to the Bahrain launch of the World Investment Report 2026, organized in collaboration with UN Trade and Development UNCTAD. We are happy to have your presence today as we gather to discuss one of the most anticipated annual publications on global investment trends. This year's report, International Investment in a Turbulent Era, comes at a time when geopolitical uncertainty, economic transformation, and technological advancement continue to rephase the global investment landscape. Today's discussion provides an excellent opportunity to gain valuable insights into these global developments and their implication for the region and the international investment community. And now, it is now my honor to introduce our distinguished guest speaker joining us virtually from Geneva. We are delighted to welcome Dr. Astrid Selstrova back to the Bahrain launch of the World Investment Report and sincerely appreciate his continued support of his annual event. Dr. Astrid Selstrova serves as Chief Trends and Data Section, Division on Investment and Enterprise, UN Trade and Development UNCTAD, Geneva. He is a key member of the team responsible for preparing the World Investment Report, one of the world's leading references on global foreign direct investment trends and investment policy. Dr. Selstrova oversees UNCTAD's internationally organized database on foreign direct investment and multinational enterprises and works with governments around the world to strengthen investment data, analysis, and international and institutional capacity. He holds a degree in mathematics from Tirana University, a master's degree in applied economics from the Institute for Advanced Studies in Vienna, and a PhD in international economics from the Graduate Institute of International and Development Studies in Geneva. Please, ladies and gentlemen, please join me in welcoming Dr. Astrid Selstrova.
Thank you very much. It's always a pleasure to present the findings of the World Investment Report in Bahrain, either physically or online. But it has been now more than 15 years that I'm doing it. It's a really pleasure. And I have to say that this is the first launch of the World Investment Report after the global launch today from the acting Secretary General of UNCTAD. And then other events will follow in the course of the weeks and months ahead. So let me start with a presentation of the report by first discussing what is basically the topic this year of the report is about international investment in a turbulent era. Our world has entered a period of profound turbulence reflected in seismic shifts in the global investment landscape. In 2025, global foreign direct investment rose by 6% to reach 1.6 trillion. But this growth masks underlying fragility and disparities across countries, regions, and sectors. So we would like to know what's happening basically in terms of investment now in this kind of turbulent era. But before discussing about the topic of the report, let me first start with the recent trends on foreign direct investment, investment in general, and then I'll focus on the topic of this year, which is basically what are some of the patterns that we see in terms of international investment. So if you can move to the next slide, please. Thank you. So as I said, my presentation has three parts. There's international investment trends, there's investment policy trends, and international investment in turbulent era, which is the topic of the report. My focus will be in the first one, and then I will speak a bit about international policies, but not too much. As you know, I am more dealing with the data, and I'm focusing more on the data. And then I will discuss the thematic part. So what's happened in terms of FDI data? Global foreign direct investment, as I mentioned, rose by 6% to 1.6 trillion, despite geopolitical tensions, trade policy uncertainty, and high financing costs. However, the increase was driven by swings in flows through financial centers and investment hubs, mainly in Europe, and by stronger inflows in a limited number of large economies. If we exclude conduit flows through major European financial centers, global FDI increased by 4% after 2 consecutive years of decline. But what is the good news is that global FDI showed resilience in 2025. However, the problem is that its investment activity became more selective and more concentrated. Growth was focused on a limited number of host economies and a capital and technology-intensive sectors, notably digital infrastructure, semiconductors, and selected energy-related activities. The top 20 host economies account for more than 80% of global inflows, reflecting the continued concentration of investment in large markets, advanced economies, and financial centers and investment hubs. Here, project-level indicators point to a fragile underlying investment conditions. Cross-border M&As values declined by 7% despite a strong domestic deal-making. Greenfield project announcements remain closer to 2024 levels, but were supported mainly by mega projects in data centers, oil and gas, and semiconductors, as I mentioned before. And international project finance halted a 3-year decline, with values rising by 3%, but remain about 1/4 below the 2021 peak. Deal numbers also declined by 11%. But what is important is that FDI remains the largest source of external finance for developing countries. In 2025, it accounts for about half of their total external financing, ahead of remittances, official development assistance, and portfolio flows. Its development role in LDCs, this share is 25%, so it was much lower than official development assistance as well as remittances. But still, the important role, the development role of FDI is distinct through its links to productive capacity, technology transfers, and participation in global value chains. So what is going to be the outlook for foreign direct investment in 2026? We think that still it's highly uncertain and with significant downside risks. Slower global growth, trade policy uncertainty, geopolitical tensions, and conflicts are likely to weigh on investment decisions, leading firms to cancel, suspend, or delay projects. But on the positive side, we have strong profits among largest multinational enterprises, and they could support some investment and productive investment activity. But nevertheless, this kind of strong profit, then productive investment activity still is likely to remain subdued and uneven. The strong balance sheet of leading firms may support investment in highly valued industries, but risk further concentrating of FDI in a narrow set of sectors and location. If you can go to the next slide, please. Thank you. So if we go now to see what is happening at the regional level, we are trying to slice, in fact, FDI now first at the development level. We want to see developing countries and LDCs, and then at the regional level. So in terms of development level, we see that FDI flows developed countries increased by 11% to 723 billion. The increase was concentrated mainly in Europe, supported by flows through financial centers and investment hubs. Flows to North America remained broadly stable by continued investment in strategic industries, but it was affected by weaker M&A and project finance activities. Other developed economies remained stable. Across developed economies, greenfield projects increased, even as project numbers fell, pointing to a fewer, larger projects concentrated in capital and technology-intensive sectors such as semiconductors, data centers, clean energy, batteries, and advanced manufacturing. What is happening now in developing countries? They increased by 2% to more than 900 billion. Developing Asia remained the largest recipient, while Africa and Latin America and structurally weak economies showed diverse trends. In Africa, FDI flows increased by 70 billion, although declined by the exceptional value of 99 to 2024. Still, it's the third largest level, and it is 1/3 above the average of last 15 years. So there are good news, and greenfield projects in Africa increased in terms of numbers, but the value decreased, pointing to broader engagements through smaller projects. What's happening in developing Asia remains the largest recipient, as I mentioned, but there are still, again, here there are some divergence. ASEAN countries, they saw an increase, South Asia an increase, and West Asia increase, and Central Asia also. The only sub-region that saw decline, it was in East Asia. China decreased for the third consecutive years their FDI. Nevertheless, FDI in China, which is now the rate of decrease, it's smaller than compared to the previous years. It is more focused in high value-added and advanced manufacturing. In fact, the part of R&D is getting more and more FDI flows in China. There is as well a strong growth in India, where inflows rose by 44%. But nevertheless, another characteristic that I want to mention here is that 8 out of top 10 developing economies were in developing Asia. So still, and they account quite a lot of 80% of global inflows in the region. Goes to these countries. So still, there is quite a lot of concentration. What's happening in Latin America and Caribbean? They increased by 14% to 140 billion. It was driven mainly by Brazil, Mexico also. They saw an increase in FDI flows, but in Latin America, there is decrease in project value, which are announced deals, which this is basically gives some indication that might have some decline of FDI in the future, in the years to come. So this is basically the trends at the global and the regional level. Now, if you go to the next slide, please, this is what's happening FDI flows in Bahrain. flows in Bahrain decreased for the second consecutive year and reaching around 800 million, a value last seen in 2016. Nevertheless, if you look at the investment data, we saw a big increase or a strong performance in cross-border merger acquisitions. In 2025, cross-border merger acquisitions targeting Bahrain reached 1.4 billion, one of the largest. And this was driven by acquisition in basic metal. There was a 20% acquisition in the largest company that you have in Bahrain, as well as projects in ICT and financial service industries. While the value of announced greenfield projects remained broadly stable, the value of international project finance also nearly doubled from 0.9 billion to 1.7 billion. And the number of project finance increased by 33% from 6 to 8 projects. So in terms of balance of payments, there is a decrease in terms of FDI. But at the project level, there are some good news, which might augur that might have some the prospects as well for FDI might be positive. In Asia, in West Asia in general, in GCC countries, we have a big increase in United Arab Emirates and Qatar. In Saudi Arabia, record strong growth. Qatar also recorded a notable increase in FDI flows from 460 million to 3 billion. So the sub-region benefited from its role as a corridor between Asia, Africa, Europe and Africa. But of course, rising geopolitical tensions and conflicts are likely to affect the implementation of announced projects and increase downside risk for FDI, particularly in energy, transport, and logistics. If you can go to the next slide, please. Thank you. So now let me look at the industries. If there is a word that you want to take with you after my presentation, or if you can look at the report, is concentration. We have a big concentration of investment in countries and in sectors. So there is growth of announced greenfield project, and international project finance was largely driven by digital infrastructure. Greenfield project values in digital rose by more than 80%, and project values in oil and gas and semiconductors also increased, but on a much smaller scale. Most other sectors registered significant declines, including especially renewable energy. For the fourth consecutive year, investment in renewable energy decreased. Other infrastructure sectors and basic infrastructure sectors, for example, transportation or they are manufactured. So other infrastructure segments, they saw decrease in their value, and GVC intensive manufacturing. And this is related with the topic that we are going to discuss, the main topic of the report. They announced greenfield project in GVC fell by 30%, of course, amid policy uncertainty and supply chain reconfiguration trends. Several of these industries were more affected. Project values in electronic, if you exclude semiconductors, fell by nearly 40%, in automotive by roughly 25%, and in textile, clothing, and leather by about 30%. If we look at the investment in sustainable development goals, they picked up, they increased, especially as well in LDCs. But again here, it remained concentrated and uneven across sector, economies, and investment bonds. In developing countries, the value of announced project increased by 11%, but it was in telecommunication and in some high income developing countries. In other sectors, the relevant investment sectors, including transport, water and sanitation, health and education, continue to lag, particularly in project numbers. A very interesting part of the report, which I would really strongly suggest you to read, is about we have a section discussing the world's largest MNEs. We found that largest MNEs continue to expand their international footprint. with foreign assets growing faster than their foreign sales. The expansion was driven largely by firms in strategic sectors, such as semiconductors, pharmaceuticals, and electrical vehicles. But despite concerns about reshoring, there is little evidence of a broad retreat from international production. Instead, many MNEs from developed economies are expanding both domestically and internationally, while firms from East Asia and other developing economies are emerging as a new generation of global players. And here we are looking at two specific players: state-owned enterprises and private equity investors. They are becoming increasingly important actors. State-owned ownership now extends to more than 1/4 of 100 largest non-financial MNEs that UNCTAD report is a part of package of the World Investment Report. 25 of them are state-owned enterprises. And we have as well another 100 non-financial MNEs from developing countries. There are 50 of them, they are state-owned enterprises. So we see that there is an increase of state-owned enterprise, or there is an increase in internationalization of state-owned enterprises from emerging economies, but also greater government involvement in strategic industries. We are looking as well at the private equity, and we see that private equity as well, they are becoming important players in international investment, and now they account for 1/5 of global M&A activities in the period 24-25. So this is about the trends on FDI. And now if I go to the next slide, this is about the investment policy trends. I will speak only the first slide. If you can go to the next slide, please. And I will mention only the first slide, and then I will go to the main topic for the sake of time. So in 2025, national investment policymakers became more active and more selective. The number of new measures reached a record high, 229 investment policy measures amid, this is a record, as you see from the graph, amid heightened global uncertainty. Most of them remain favorable to investors, 73%. Increasingly, the form of target incentives, facilitation, and selective liberalization aimed at channeling investment towards strategic sectors such as clean energy, digital infrastructure, advanced manufacturing, and critical minerals. However, the share and number of measures which introduced new restrictions or tightened regulatory conditions for foreign investment increased compared with the recent years, confirming a gradual shift towards a more cautious approach to investment openness. While remaining higher than in developed countries, the share of favorable measures in developing economies declined for the first time since COVID-19 crisis. The shift reflected expanding investment screening, new entry restrictions, localization requirements, and tighter rules in strategic sectors. Some developing economies are scaled back or eliminated investment incentives amid growing concern about fiscal sustainability and the effectiveness of investment regimes. So I would not go more further to this part of the policies, although it is quite interesting, but for the sake of time, I would ask colleagues to go forward a bit with the presentation, and to go, if you can, and you go to the slides start with the third part of the presentation. If you can, yeah, please. Yes. Okay. So this is the presentation for the main topic of the report, because otherwise it's going to be a bit longer as a presentation. So what is why we looked at the investment in a turbulent era? The thematic chapter of this year's World Investment Report looks at the central question of the global economy. How is international investment changing in this era that I mentioned at the beginning, when we have a seismic turbulence, and what does it mean for developing countries? Our starting point is simple. Foreign direct investment, as I mentioned, remains essential for development. It brings capital, technology, skills, infrastructure, and links to global markets. But the environment in which investment takes place is undergoing profound changes. Investment decisions are no longer driven primarily by efficiency, cost, and market access. These factors still matter, but they are now increasingly coexist with concerns about geopolitical risks, technological competition, supply chain resilience, security and economic security. So the report highlights 4 structural changes in international investment and the policy responses needed to help developing countries to navigate this new landscape. So the first one, and this is the slide that you have it in front of you, the first major trend is that investment is growing rapidly in sectors at the center of global strategic competition. These include AI infrastructure and AI-related technologies, semiconductors, critical minerals, energy transition technologies, and other advanced sensitive technologies. The report is defining very clearly how we define these strategic sectors and what is the methodology that we are using, the database that we are using. Here we are using announced greenfield projects. Not that we don't want to use the FDI data, but because of the granularity that we have in the announced greenfield project at the project level, we are able to make this kind of distinction. Therefore, we looked only first at these 5 sensitive strategic sectors. And we found that what are some of the numbers that we get. The numbers, as you see, they are striking. The share of the strategic sectors in global greenfield investment rose from 16% in 2020 to 44% in 2025. So the value of announced projects in these sectors increased from $109 billion to $576 billion over the same period. This reflects a series of powerful investment waves. AI infrastructure is expanded rapidly, driven by data centers, cloud infrastructure, and the digital backbone needed for artificial intelligence. Semiconductors are the fastest growing segment, reflecting their central role in digital infrastructure and advanced manufacturing. Critical minerals and clean technologies are also expanding as demands grow for the inputs and capabilities needed for the energy transition and the new industrial systems. So if you can go to the next slide, you see that investment in strategic sectors is becoming highly concentrated, again, in a small number of economies. Global economic fragmentation and industry policy dynamics reinforce this tendency by favoring location with established technology capabilities, strategic assets, and supportive policy framework. In 2025, across the strategic sectors analyzed, the average share of the top 3 investor economies was 72% of global greenfield project values, and the average share of top 3 recipient economies was 56%, compared to 27% and 34% respectively in other sectors. So here we are talking about concentration. So there is a concentration in strategic sectors. Now, if we go to the next slide, you see that many developing countries remain largely excluded from strategic investment pool. Low income and lower middle income economies together attract only 10% of global greenfield investment in strategic sectors, compared with more than 20% in other sectors. While some strategic industries offer entry points through natural resources, manufacturing platform, or growing digital market, the rapid concentration of investment risks widening existing development gaps. So if you go to the next slide, please. The third trend is that industrial policy I already mentioned it in my presentation before, but the trend is that industrial policy and economic security measures are increasingly shaping investment decisions. So government are using incentives, are using subsidies, local content requirements, public procurement, investment screening, outbound controls, and national security provisions in international agreements to attract investment to priority sectors and to limit transactions considered sensitive. This is also visible in national investment policy making, and I mentioned to you the measures, 29 investment policy measures, the highest recorded by UNCTAD. At the same time, restrictive measures continue to expand through investment screening, entry restriction, and localizations. So here in the graph, we are looking at subsidies. Subsidies are rising globally, but these charts illustrate differences in the capacity of developed and developing economies to deploy industrial policy support. So, although the number of firm-specific subsidies is broadly similar, the financial amounts involved differ substantially. The value of these subsidies has risen sharply in developed economies, while remaining relatively stable or declining in developing countries. So you see the difference between the number and the values. If you look at the values, there is a divergence there. So it shows the capacity that developed countries have in order to attract investment. So again, we are risking this kind of gap between developed and developing economies. So if you can go to the next slide, please, and my next slide will be the last slide, if you can, because there are, please, if you can go to the last slide, yeah, here, please. So what are some of the policy responses that UNCTAD is identifying to address these challenges? The World Investment Report identified, as I mentioned, 5 practical priorities for developing countries, navigating a more complex investment landscape in which entry points are more selective. First, prioritize strategically. Countries should focus on a limited number of realistic opportunities where they already have or can build competitive advantage. Second, use industrial policy selectively. The objective is not to match the subsidy programs of larger economies, but to remove investment bottlenecks surrounding the identified priorities. Example, skills, infrastructure, and policy gaps, and strengthening the development impact of FDI. Third, manage national security risks without undermining openness. Targeted, transparent, and risk-based mechanism can address genuine concerns better than broad sector restrictions while preserving an attractive investment environment. Fourth, turn disruption into an opportunity for repositioning. In a context of global uncertainty, countries should use investment promotion, facilitation, and aftercare to help preserve viable investments, address operational constraints, and position themselves to capture emerging supply chain opportunities. And finally, use regional integration as a development lever. Larger markets, stronger connectivity, and deeper regional production networks can improve both the attraction of FDI and its contribution to development. So in addition, international cooperation is key to preserve a set of common for investment in a contested world. Greater transparency, dialogue, and on investment-related measures and pragmatic cooperation can help maintain predictable conditions for cross-border investment in a more fragmented global economy. With that, I would stop my presentation, and I would like to listen to the questions and comments. Thank you very much.
Thank you so much, Dr. Asad, for your insightful and informative presentation. Your analysis of the findings of the World Investment Report 2026 has provided us with a deeper understanding of today's evolving investment landscape and the opportunities and challenges presented by an increasingly turbulent global environment. We sincerely appreciate your time and thank you for joining us virtually from Geneva. We will now open the floor for the question and answer. Please, feel free.
Good afternoon, Dr. Astrid. Hope you're doing well, and thank you for the presentation. We went through the reports as well. It was very interesting. We noticed that Oman and maybe Qatar revised their inflows. Can you just tell us maybe a brief on how did Qatar increase from less than $1 billion to $3 billion in a year? Were there any strategic projects that you remember? Thank you.
Thank you very much. So let me answer with the question. And to be frank, I don't know by heart all the projects, in different countries. And I have to say that I have to look at the details, what has happened with the data that are reported by Qatar and Oman. Oman is the data are estimated. So we get the data from, I have to look, we get from the central bank, but we didn't get verification. Well, Qatar, they verified the data. Now, they might have projects. In what we found in terms of the data is that, what are some of the reasons why there is an increase from 400 million to 3 billion in Qatar? I can mention to you quickly, just one moment. So basically, there was driven by investment in chemical, energy, and information and communication services. But I have to be fair with you. I have to look at it more in details in terms of the project and to see where this increase on FDI took place. Of course, that numbers might change. It's not that numbers not change. It's not only Qatar or Oman that change the data. The data are updated on a continuous basis. And of course, when they do the surveys, when they complete the survey, they might have gotten some more information that it was not available before. This is a practice on all central banks or statistical office that collect the data. But I have to look at it more into details to come back to you. So apologies for not being able now to, but I will see more in details and I will give you a more clear answer about that. Thank you very much.
No worries, Dr. Astrid. Yes, you can come back for her later after the session. Yeah.
Thanks for this good report about international investment in a turbulent era. However, now in Bahrain and in the Gulf, what are the consequences of this situation, the war between America and Israel and Iran? Still, this war is not over. The position is not clear. What will be the effect of such a situation for investment in Bahrain and in the whole area?
Thank you very much. I think this is a very good question. It's not necessarily to have a satisfying answer because it's not easy to answer this question. But we have a box in the report where we are looking at the impact of a conflict in the Middle East, conflict there, and implication for conflict in the Middle East for global foreign direct investment. And for sure that is going to the main conclusion of this box is that the conflict is likely to depress global FDI in the near term and contribute to a more selective and uneven recovery, favoring location with greater macroeconomic stability, low geopolitical risks, and more resilient infrastructure. We try to split between, if you look at the report, which is available online as well, we are trying to look at the oil exporting countries and oil importing countries. And what is the effect in the region? And what is the effect at the countries outside the region? And exactly as I mentioned to you, without going into more details in the impact, basically, the conflict will have an impact both. It will have impact of the shock is uneven across the countries. Fuel importing and financially constrained economies are particularly exposed because of the high energy cost and tighter external financing condition. Well, in these economies, FDI is likely to be affected through weaker project pipelines and delay in implementation. But the conflict also has implications for major outward investors in the region, particularly in the Gulf, which may focus now, you know that we have many sovereign wealth funds and state-owned enterprises from the Gulf that are quite big outward investors, and they might focus more, might have a more cautious approach to new cross-border commitments and basically may delay or cancel M&A deals. So there is a description of some of the factors in terms of the conflict, but I have to say that we need more data to provide a more what is going to be a real effect of the conflict in FDI and investment in general. These are some scenarios. We see as well some, we see what's going on in terms of the announced greenfield projects, but it will take some time. Now countries are starting reporting data for the first quarter of 2026, and we might see as well some, but I think later in the year, we will see. Investment is always, I always keep saying that investment is a type that react a bit slowly. It's not like portfolio investment, but nevertheless, the conflict will have definitively, as I mentioned, several of the factors in terms of FDI at the global level. At the global level, as well as at the regional level, at the oil importing countries, as well as oil exporting countries.
Sir, I have a question about Bahrain's ability to attract investment, and what does Bahrain need to do to get into a plan or a futuristic forward-thinking direction towards getting attention and getting investments into Bahrain, and what sectors Bahrain is good at and what Bahrain can build on for the future?
This is once again a very good question, but it takes you have quite a lot of how can I say, this report shows that the investment in digital and related digital sectors will be, at least for some times, present there. You have multinational companies that are investing, and they continue to invest in data centers. They are going to invest in digital, in AI related investment. And this might be area that Bahrain, but not only Bahrain, the region might look as well in terms of attracting investment. But as I said, this is as I mentioned, when I finished the report, there were 5 suggestions there. Countries, you should not compete with the larger economies. All countries now, they want to have data centers. France is getting data centers, 90 billion investment in data centers. France is one of. United States is getting quite a lot. So the problem is how to make investors, how to make Bahrain, and not only Bahrain. When I say Bahrain, you have to increase as well all the countries in the Gulf to be attractive in terms of this area. We mentioned this kind of policies that we mentioned at the end of the report that I mentioned there, and that's what so my suggestion is that this is going for some time to be the future, the investment in digital. So we have to find, I mean, Bahrain is to find a way how to attract as well investment in this area. Of course, that there are other sectors that might be might have a future. I mean, the same thing related to it, semiconductors as well. But still, once again, it's a bit difficult. There is a big competition about this project, but yeah, this is what I have in my mind. But my colleagues as well, they are in the room, and you have a very important institutions that are looking at the opportunities to attract investment in these areas and for Bahrain to benefit. But that's my ideas about that. Thank you.
Thank you very much, Doctor, for the insight and for the description of the report. My question here, is there any chapter in the report to describe the Bahrain versus the GCC, Arab countries, and other Asian countries, and what the obstacles and what's the things that the Bahrain Trade and Chamber of Commerce and the other SMEs can do to boost the economic and concentrate the future technology, the future innovation, and things that can enhance the economic. Thank you very much.
Thank you very much for the question. I appreciate that, because this is a very important question. The report is only 200 pages, and as much as I love to include information about Bahrain, because Bahrain is my country, my second country, that I always come there, and it's very difficult to go and pinpoint the needs of each country. We try to basically to address the issues of different countries or different group of countries, and to come up with a kind of recommendations. Unfortunately, there is no, in the report itself, there is no too much information about Bahrain or some other individual countries. I have to say that it's not only for Bahrain, it's as well some large European countries or other developing countries that we don't mention it. But we have in the report, we have an annex table when we have the data, but we have some annexes to the report, which we call it regional trends. And in developing Asia, you can compare Bahrain with other countries. So you have to see there is more information about region, Gulf region or West Asia, where we include not only GCC countries, but we include as well Turkey, and we have as well some other non-GCC countries. And we provide some information about West Asia as a part of developing Asia. Unfortunately, we don't have specific information about country for Bahrain and in general for countries. We usually provide this through other publications. We have investment policy reviews, for example. We provide investment policy review, prepare policy reviews for different countries, and we provide this is projects that's 1 year, 2 year, when we look at the country and what are some of the policy recommendations in order to increase investment or how to make investment benefit for the economy of the country. And this might be as well a way how Bahrain, for example, can profit by having an investment policy review specifically for the country. We have a team working on that. And then we try to basically the general the recommendations that we provide in the World Investment Report, they are more practical than at the country level or at the region level. So this might be but unfortunately at the report, we do not provide specific for Bahrain or for other countries.
Thank you very much, but we hope that you include Kingdom of Bahrain in your future reports. Thank you very much.
Thank you.
Thank you. We've seen from the report and the slides that you have shown that maybe a substantial size of investment goes to sectors like AI and semiconductors. would maybe did that affect the where would investments go, especially when it comes to developed and developing countries? And if so, do you have any recommendation on that particular area? Thank you.
Thank you very much. I think your question is about the full chapter, third chapter of the report. It's basically, it is true that, as I mentioned to you, developed countries received FDI more, 11% more. Well, developing countries, they saw an increase of only 2%. In fact, in the report, we sliced a bit further because developed and developing countries, they are two big groupings. You know, as much as I like to call Bahrain developing countries, but Bahrain is a high-income country. So I would like, therefore, we sliced as well by income group. And the income group, when we include, for example, based on the World Bank classification, we saw what's happened FDI in income group. And the biggest increase came to the high income group countries, where we have all OECD countries, but including also Bahrain, including the UAE, Singapore, Hong Kong, China. So these are basically large countries that are large developing countries, but that are high income, that they have they are as well as financial hubs. Middle, lower, upper middle countries, they saw a stagnated FDI, but the group that saw a decrease in FDI was lower middle income countries, 5% decrease. There, so basically the biggest decrease was in these low middle income countries. Low income countries, there was an increase, but they're from low levels. So the most important is if you slice it by different groupings, more by income level, you'll see that the biggest investment go to developed countries or high income countries. And the biggest sectors that receive investment was exactly these digital related. So data centers, there were basically three sectors. They saw a big increase. There were data centers. In terms of greenfield investment, they saw $255 billion increase. But where this 255 billion increase went? It went to, as I mentioned, to France. It went to the United States. It went to high-income countries, and it didn't go to the developing countries, and of course, no low-income countries. Semiconductors again, they went to countries that are they quite developed on that, and you see you have big investment, 100 billion investment from the TSMC from Taiwan province of China. They invested in the US, 100 billion in semiconductors. Or we have ByteDance, the Chinese company, 42 billion data centers in Brazil. So there is quite big increase projects but these are concentrated. They are concentrated in either the high income countries or concentrated in some big developing countries, like as an example, I mentioned Brazil. The only entry point for developing countries was critical minerals because of the resources they have. This is the only part. And this is what the report is. So out of these strategic industries, all goes to developing countries, to emerging, to the high income countries. Only critical minerals, they are LDCs, low income countries, they are profiting as an entry point. But this is the only option. And so this shows that there is a big divergence there. And therefore, we go to what I mentioned to you, the 5 criteria, at the end, when I mentioned the recommendations of to prioritize strategically and to use industrial policy selectively. And this is, and then to manage national security risks and to turn this disruption into opportunity by repositioning. Of course, these are general words, and it depends. Once again, we go back to the previous questions, that we have to look at the specific countries, the specific needs. But this is important. And the last one, which I think is important, is to use regional integration as a development ladder. You know, they are small countries. In order to increase with the regional integration, you basically increase your own market, and then you larger markets, you have a stronger connectivity, and then you become target for multinational enterprises. That's my answer to your question. Thank you.
Thank you very much for your presentation. You have described an international landscape, and of course we can all see it now, where FDI is happening subject to many more constraints than used to be the case in the past. We have the strategic dimension, nearshoring, politics, whatever. My question may be premature, but I'm wondering if you're seeing any implications that this might be having on returns on investment, and in turn, whether it is changing the profile of investors and sources of capital in these flows globally. And finally, you mentioned regional integration several times. Now, we live in a fragmenting global economy where, of course, the case for regional integration seems to be growing stronger, but at the same time, we also have an intensifying competition among countries, whether it is for critical resources or for data center capacity or whatever. And one of the challenges, for instance, in the Gulf region for decades has been the fact that everybody is, broadly speaking, playing from the same playbook. So how do we balance these national ambitions with the evidently stronger case for regional integration? Thank you.
Thank you very much. Always for very good questions. Let me start first with a rate of return, and this is a very good question. In fact, I didn't have time to mention it. When I spoke about prospects of FDI, one of on the positive side was the rising profit of multinational, but largest multinational enterprises. But when we look at the rate of return, we saw that the rate of return decreased. It shows that there is a divergence between large multinational enterprises and a larger pool of all firms that are investing abroad. And this kind of divergence goes to this kind of concentration. And there is a risk that basically, if you have large companies that have large profits, while the rate of return of FDI is decreasing, is exactly the point that the companies are basically, the internationalization of these companies are becoming more concentrated, and they are investing more on a strategic sector. So this is something that we raised in terms of prospects. It is true that large companies, they have quite a lot of profit. So there is a dry power there they can invest. But if you look at the rate of return, and we calculate it, and we have a table there for the rate of return, we see that the rate of return is decreasing, and this is the matter of it's a concern. And I think this is something that we should be worried about. I mean, this kind of discrepancy, a kind of concentration again in the profitability of the multinational enterprises. Now, in terms of regional integration, this as well is a very good question. And I agree that it's not easy. I mean, of course, it is easy to say, you have a bigger market, then you basically profit and you can be magnet for countries. But the point is that what is happening at different regions, we see that, for example, in Asia, in ASEAN countries, regional integration still is present there, and the countries are investing to each other. And then although they might be not necessarily, so we compare if I am not mistaken, in the report in East Asia or in Asia in general, we compare outward investment with intra-investment. Although they are not the same thing, they are still present. And I think it is the capital is regional capital still is important, and it is playing an important role in different regions in the world. Now, how can we make sure that this regional integration will work in practice? And this is a very important question. I think that when we see now, I mean, the report itself is pushing for this kind of regional integration, because where we are in a turbulent situation, the only one of the you have basically to strengthen your own base, not only in your own country, but in your own region. So in order to attract this, as I said, investment, you have to make the case to the multinational enterprises to invest in your own region. And the only way to make the case to get these kind of data centers is by playing as well the card of regional integration, by telling that we are indeed we are asking for data centers or semiconductors, for example, in our region, but this is going to serve all the region, not only our own country. And this is the only way how we can you can improve, because from one side you have I mean, the Gulf countries, they are rich, but they are competing with European countries, and European countries, they are trying to work together in order to attract investment in these areas. So there are different, quite a lot of initiatives in European Union, for example, or in US, to attract investment, use this kind of larger markets. And these are examples that can be used as well in this in your own regions to attract large investment in data centers or in digital related, in AI related investment. So yeah, it's not maybe a satisfying answer, but at least this is what I'm.
Thank you, Dr. Asrat. So Dr. Zakaria, please.
Hello, Astrix. Thank you very much for this presentation. And thank you again for your effort on preparing such a platform to launch in Bahrain. And special thank to you really for your time and commitment. And I extend the thanks to Antad for such effort. Thank you very much. My question is really just to apply the source of worry that the division of the FDI is really shifting toward the developed countries and high-income countries, although you don't classify them European, non-European, but all high countries, and the shift is really huge for low income, upper income, and all type, and that stretch a lot of social impact on these countries. The source of worry more on this area, that the FDI that you mentioned is going to AI, semiconductor technologies, which these other group of countries cannot compete. So you can see the trend is getting worse on near future. And when I go to the last page of your presentation, there are 5 policy implications that you suggested and Antad, but I see them still, in a way or another, I'm sorry to say that, is a repetition of old suggestion. There is no breakthrough which you require, which actually figure tell we need to do something urgently about the FDI for lower income countries. Thank you, sir, very much for this presentation again. Thanks.
Thank you very much. I really appreciate, and I'm very glad that Dr. Zakaria that we meet you online. This is a definitively I share your concern, and I understand that the ideas are not new and there is no breakthrough. But I would say that still the report is important for first raising the awareness of course. Everybody knows this is becoming a fact now that everybody investing in AI, everybody investing in data centers, everybody investing in developed countries. But this report provides empirical evidence what is happening really based on the data that we have. Therefore, this is a kind of raise the awareness of all developing countries to what is going on and how they have to deal with this situation and how to play. Now, the recommendations, of course, they are a bit, they are known, let's say, but still, I would say that the first value added of the report is the raising awareness of what is happening really in the practice, and what is the first report that is looking into details, how to what is happening with the strategic sectors, what is happening with the investment in general, and this gives a better information to the policymakers and raise awareness of policymakers. Now, of course, in the same time, there is a need for targeted policies, and this is, I go back to the previous question of your colleague, that now when countries are asking for investment policy review, how to increase investment, I would say from the report, it's not the countries that should ask for it, it's the regions should ask for it. So I would say if the GCC countries will ask UNCTAD for a regional investment policy review. And this will help countries in the region to harmonize their policies, to improve the regional integration, and to attract better investment. So this is, but again, then it's going to be another analysis to look more into details in order to improve their kind of to improve the attractiveness, or to provide some policy recommendations at the regional level. So this might be as well an interesting suggestion so the countries in the regions to how to improve, or how to basically to improve their regional coordination in order to attract those investments that are now more and more going to the north. That's the suggestion.
Greetings, doctor. I just have a question about, so we're collecting a lot of data, but I'm wondering if maybe we could use analysis of the data and data-driven decision-making in order to make better investments which could help Bahrain and other countries. Because, for example, this doesn't seem to be something that can be solved by an individual effort, but probably it will need cooperation and systemic level thinking. Thank you, doctor.
Thank you very much. So I don't know, I don't know if I understood correctly the question. The idea is that to use the AI for data collection, is that if you can,
yes,
or
AI could be involved in doing this, yeah. Because not just for collecting, but after we collect the data, we could perform maybe some analysis of the data so that we can get good insights or interpretations of the data, because people would like to probably know how to interpret the data and also make maybe concrete plans on what to do afterwards.
I think this is very, very interesting, and I agree with you that especially first by the data. You know, we have certain questions from some countries that how can they use basically the AI for improving first their data and then identifying the issues or problems that are related with or to identify some of the problems with the data. I think this is an interesting area to be looked at, and I think not only us but the IMF and the OECD, and we are discussing about this, but it takes a bit more time, you know, to I'm speaking about the investment data for FDI data. To use AI, we still are not we are not using it as much as we should. But I think maybe some central banks, they are using it when they are collecting the data. But this might be this is a very interesting suggestion. I take this as a very interesting suggestion. Thank you.
Thank you. Last question. Can we take last question? Anybody?
I would like to ask a question. Why did you, actually two questions. Why did you choose Bahrain? And secondly, what is your main goal? What is your plan for the World Investment Report of 2026? Sorry if this wasn't clear enough, but
very good.
Yeah. Thank you.
Very good questions. Why I choose Bahrain? This is the first question, and I choose Bahrain for historical reasons, and for now that I have presenting the report for a couple of years, I'm very glad to continue doing it. This is a very important, for presenting, but we are doing this, the World Investment Report, we are presenting in different fora. So we will start in other countries. You know, we are doing it tomorrow. A colleague of mine will present it in Egypt. Then we are going to other countries. We are discussing to do it in New York. We're going to do it in China. So this is going to be a presentation. It happens that in Bahrain, always I present the report in the same time that we launch the Global Investment Report. But otherwise, it is, and it is always my pleasure to do that. But as I said, this is a part of process of launching of the World Investment Report worldwide. Now, what is the purpose of the World Investment Report? And you're right. You know, this is the report has started in 1992, and it is we are looking at multinational enterprises, how they are. I mean, what are the recent trends in foreign direct investment, in investment in general, and we would like to help developing countries to improve to how they can better integrate into the global investment chain. The problem is that this report is showing that we have still problems. We have a bigger problem now. We are living in a turbulent area where this chain, we are seeing a reconfiguration of supply chains. And so therefore still the idea of developing the report is to provide information to developing countries what is happening in reality, and this is what I already mentioned, but also to provide some policy recommendations. So once again, the purpose or one of the objectives of UNCTAD, because investment division is part of UNCTAD, we have several flagship publications, but the UNCTAD, the World Investment Report, as one of the publications of UNCTAD, is to help developing countries to integrate into the global economy and to better integrate and to better profit from that. So here we are saying that we want to raise the awareness of the difficulties that now the international investment community is facing. And then this is the main role of the World Investment Report, and to provide some policy recommendations, but of course they should be tailored afterwards. I mean, this report provides the umbrella. Then later on, we provide technical assistance to the countries. Of course, it is tailored, and we are using this as a basis for continuing, for providing a more concrete technical assistance to the country through different channels. We have, for example, a technical assistance through enterprises. We have a very big project, for example, in Saudi Arabia for entrepreneurships, how to improve entrepreneurships. We have another technical assistance for, as I mentioned, investment policy reviews, to provide policy reviews to the countries. We have technical assistance for other areas of how to improve the international investment agreements. You know, the countries are signing international investment agreements, and we would like to advise countries how to better profit, especially developing countries, from this. So, and then in the report, we are discussing as well some trends in terms of international investment agreements. So this is the role of the World Investment Report, and what is the role of UNCTAD in general in terms of, once again, promoting better integration of developing countries in the global economy. Thank you very much.
Thank you. Thank you so much, Dr. Asrat. Thank you all for your question and participation. And on behalf of the MENA Center for Investment, I would like to extend our sincere appreciation to Dr. Asrat Salstrover and UN Trade and Development UNCTAD for their continued collaboration and valuable contribution to today's event. Our sincere thanks also go to all our distinguished guests and representatives from government entities and private sector, academia and diplomatic missions, and our valued partners for joining us for this event. We hope today's discussion have provided all meaningful insights into the future of international investments and inspired continued dialogue and collaboration. Thank you once again for you all for being with us, and see you next year, inshallah, for the same report. Thank you. Thank you.
Thank you very much. Thank you very much.
Thank you. Thank you, Dr. Asrat.